I don't know why, but today seems like it's gonna be a great day.
A lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game.
There's a skip in my step, a pep in my pep, and I don't know why.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Guys, sorry about that weird stuff. I don't know what those weird clips were. I don't know, something's wrong with my editing software, so you'll just have to ignore those if you don't understand what's going on. I'll explain when you're older. So in this video, I'm digging through the archives back to 2006, almost a decade and a half ago, where Jim Cramer was sharing some of his inside insights on how hedge funds manipulate the stock market. This is incredible footage. I don't think Jim ever expected this video to spread around as far as it has, but hey, it is what it is. So let's see what Jim had to say. How do hedge funds, how do people manipulate stock prices up or down? Let's find out. Also, it seems that Jim had a little bit of a cold, a runny nose, which seemed to make him a little bit more talkative. So apologies for the sniffling, but you know, it's just real life. It happens sometimes. Let's dive in. Hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to Webull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake using the link in the description. Let's get back to it.
Yeah, you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Okay.
Well, by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
That actually just happened. Jim Cramer literally explaining his recommendations to other hedge funds out there is to use these kind of tactics to manipulate the stock market. And he literally says, I would never say this on television. This video, by the way, 2006 was released. This was on a website, thestreet.com, something along those lines. I don't think Jim had a conception of the fact that clips like this would end up on YouTube in the future. YouTube had only launched a year or so ago before this video was published, so it probably wasn't even on his radar. But man, this is such valuable information. And I'm not doing this to try and set Jim up or say he's a bad person or anything. This is great insight. Jim did a real favor to the investment world out there by providing these insights and giving people clarity and understanding around the fact that hedge funds do quite easily manipulate the stock market up or down. Like, this is really important to know. So it's great insight. Let's see what else he had to say. Hope his cold goes away.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it tougher?
Well, you know, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So I mean, let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But
I mean, do I even need to say anything? I will add though, those of you who follow this channel will know that Elon Musk has it in for the SEC. He calls them the Short Seller Enrichment Committee. He's also suggested that they S Elon's C and a few other jabs as well. Now, why is this? The whole point of the SEC is to stop people being able to do things like manipulate stock prices and manipulate the market. And yet here we are hearing from a hedge fund manager explaining how it's done and that everybody does it. This is why the SEC is an absolute joke. And just for the record, the footage we've been watching was shot just before end of year, just before the end of trading for the year. So when Jim's talking about the last few days needing a certain result, it's to get your quarterly profit locked in, etc. for your fund.
A hedge fund that's not up a lot really has to do a lot now to save itself. So This is different from what I was talking about at the beginning, where I would be buying the Qs and stuff.
Right.
This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good, because research in motion is the key today. So you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today, and if you're not doing it, maybe you shouldn't be in the game.
Okay.
Do my massive ears deceive me? Rewind the video. Listen to what Jim said again. Like, this is real. This isn't like some crazy deep fake footage. This is genuine information about the real world, the real stock market, how hedge funds really manipulate the market and stock prices. And as Jim said, if you're not doing this, maybe you shouldn't be in the business. Translation, this is a widespread practice, and you're unlikely to be successful in this industry if you're not doing this.
Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone.
Right.
That's a very easy one to do, because it's also, you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple, because Apple isn't doesn't.
Right, they're not going to comment. They're not going to say.
So it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone, and you call 6 trading desks, and you say, "Listen, I just got off the phone with my contact at Verizon, and he has already said, listen, we're a Lucky G house." We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
So the next time you see somebody appear on CNBS, and by the way, guys, for the few of you who haven't figured it out already, that's where the name comes from. It's not a slip of the tongue. You'll understand that maybe they have ulterior motives. Maybe the information they're presenting, their thesis, isn't in fact based in reality. It's based in their need or desire to move the stock price one way or the other. Case in point, Gordon Johnson. Nobody on earth could possibly be that short on grey matter and have a legitimate price target on Tesla stock of like $87 in today's age. Nobody's that dumb. However, if somebody maybe has a short position and will benefit enormously financially, maybe they'll feel comfortable to go out on TV and make a fool of themselves and self-immolate, regurgitating garbage, being mocked on YouTube by people like me, because they don't care if they look like a moron or sound like one. As long as the stock moves in the way they need it to move, they'll make money.
I might also, by the way, because the stock at 84, 85, with a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with you use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer at UBS. Then they call Pisani again. You have to use those guys and say, listen, I see a big buyer of puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it except
but
you.
What's important when you're in that hedge fund mode is to not do anything remotely truthful, because the truth is so against your view that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate, is that you would do these actions.
So you're talking about the mechanics of the market.
Well, mechanics are much more important than the fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you think.
Who cares about the fundamentals? Research in motion just blew out the quarter.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
It's a rare occasion for me to be left almost speechless, but here we are. The final line there from Jim, extremely telling. The great thing about the market is it has nothing to do with the stocks. True words. Really important to understand as an investor.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
right, and Bristol Myers lied.
It's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You pay for 1% or 2%.
These insights are truly incredible. Jim literally said, you've got to get it on the CNBC. That's important. This just could not get any better. Seriously, I've got to express my gratitude for Jim Cramer. This is a really, really key insight, valuable information. It's a gold mine about what really goes on behind closed doors. We don't hear about this stuff on the mainstream media, do we?
Right, and then do you get long before Macworld and the expectation that the iPhone is going to be
down.
good? Right, and then you go back
You
flip to the
certainly
long
got to
side.
use the other side.
Interesting.
Yeah, and there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play it right into Macworld where they'll probably introduce the phone and Verizon's going to take it.
Okay. Well, maybe the fundamentals don't matter, but let's talk about the Fed
remember,
a little bit.
what Wall Street Confidential is not giving you the party line. Oh, here's the party line, by the way. I spoke to Apple. The phone, I hear the phones are good, and Verizon might take it. And as a matter of fact, the research in motion sellers, I don't think they know what they're talking about.
But you've been writing about the cell phone market. You think you don't want to be involved in that.
The problem with the cell phone market, frankly, is that these guys are all killing each other. Someone has to take a dive. Motorola and Nokia have to get in a room and just fix price. They've been reluctant to do that because of the various justice departments and because they
it's illegal, right? Yeah.
Well, that hasn't stopped a lot of other companies.
This is true.
This seems to be a case where they seem to be directly worried about the authorities. It's almost as if they have a lawyer that matters, unlike, say, the Bristol Myers lawyers. And, what eventually happens is the shareholders demand that you get phony lawyers and you sit in the room. And it'll happen soon.
It just gets better and better. Now keep in mind, this was filmed in 2006. Cramer is talking about two phone companies needing to get in a room and fix prices illegally in order to survive and thrive. Nobody's implying that this is something that Jim would do if he was running a company. Nobody's suggesting that. But he's just saying that this is how these guys get through this period. This is what they need to do.
What I'm trying to go for in the Wall Street Confidential, and I'm not saying you're sending me, I have to talk about what it's like at my hedge fund, okay? And what other hedge funds do. Because the difference is that if this is an intraday show, and you need to know what I know is going on. Now, we step back. Research in Motion was a real blowout quarter. It was a really good quarter, and I was quite surprised how strong the margins were. It looks like the other guys have really dropped out. It's a terrific story. Should it be up 6? Yeah, I think so. But, look where we are. It's Friday. You got 5 more days to make your quarter.
Right.
Can you really risk having RIM up this much? I don't think you can.
Okay, and they're not.
On that note, I hope you guys have found this video insightful. Let me know in the comments below. Was any of this news to you? Have you learned something today? Or did you already know that big funds out there manipulate the stock market, put morons on CNBC to spread false rumors to move the stock in certain directions, etc.? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And of course, don't forget your free stocks with Webull. If you're in the US, you can start a new account with Webull using my link below. Deposit $100, you'll get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, New Zealand, or the UK, you can get a free stock using the link in the description to stake. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.